Good morning. Has everybody had their coffee?
Yes.
No, if not, you might need it. It's taxes. It's not going to be near as exciting as what we just heard on technology. This might be the absolute opposite of technology. So, it's April 9th. How many of you have done your tax return? Woo! Okay, so we're thinking forward. I have not. Yeah, and you know I'm working on your questions, and I'm still either working on mine. And actually, I had to file one of my own child's for the first time. So that's what happens when you make them work. Because you need to file that one too. So today we're going to do kind of a marathon. When I found out 30 minutes, I was like, wow, that's really fast to talk taxes. So in front of you, you have tax tips. This is a publication that used to happen every year. And it's really just kind of a boiled down version of a really big book, about 100 pages, that talks about some of this. And so what we try to do is discern things that we think you need to know kind of briefly and then point you to other resources. And so a little bit of a hiatus on producing that, and then this year, three of us picked it back up and went for it, and then Lee asked if we would come and present on it. So here we are today. So I have to do this because I have to cover my backside. So I want you to know this is educational in nature. I do not file anybody's tax returns other than my own. I have not been audited though. Okay? So far so good. So this is just educational. I'm not a tax preparer. Any of these things that start to get really heavy, you should probably check with your tax preparer. The space I like to operate in is making sure you understand some of the terminology and some of the places that are very forestry specific that I'm finding that your tax preparers don't know anything about, right? And so that's kind of the space I try to operate. This is going to be really super high level, but what happens is you all have tons of little details to every question. And so I can't go there. If you have questions, feel free to email me. We're like on the 11th hour right now if it's this year, but you're going to have to give details in order to get detailed answers. And then really honestly, sometimes your questions just come down to it depends. Anybody who's ever talked to an economist knows that that's our standard answer is it depends on a lot of things. And then I have to of course tell you this, based on what I know right now, people like Scott are over there trying to change some of these things for the better for us, but we also have legislators that constantly are looking at ways to change the tax code. Sometimes that means that things that I tell you today are gone tomorrow. So hopefully none of that's going to happen. I haven't heard any rumblings, so these are good for now. All right, so in the vein of tax tips, that's how I'm going to structure this today. So one of the first things I'd like to do is to think about knowing your tax classification. This is kind of the key to understanding whether you can take a loss, where you can take a loss, how you handle any certain expenses that you have in forest land. It all comes down to how you are operating. And so we talk about it as whether you're in the business, whether you're in an investment, or the worst category you can be in, which is personal use and hobby. If you've ever heard me speak, hobby is one of the worst words that you can come across in the tax code. You never want to tell an auditor that you are having fun out on your property. You should really kind of tone that down. Okay? So when you sit down in front of anybody that does this, even an accountant, when you sit, are there any in the room before I go further? Okay, so it's okay. When you sit down with one of them and say, yeah, I go out on my property, I hunt for deer, I'm fishing in the ponds with the grandkids, you haven't said anything that sounds like a business yet, right? So first and foremost, if you want it to be a business, you got to act like it's a business. If it's an investment, you need to act like that's what's going on. That doesn't mean you can't have fun, okay? You should, okay? But it needs to be how you think about it and how you present it. I'm not asking you to fake it. I'm asking you to think about how you're coming across to other people. So when we think about whether you're a business or an investment, that's kind of the hard, what is it, right? If I own 40 acres, I may or may not have any harvest going on for several years, and it doesn't actually look like I'm doing anything. And it's not like growing an annual crop where I actually need to be out there tending it. I don't need to stand there and watch the trees grow, right? It's like watching paint dry, right? So I don't need to stand there and do anything. And so when I'm trying to describe the activity level on the property, it gets a little bit challenging. And so this frequency of activity is not necessarily that you're harvesting all the time, because that's not going to happen for most people. But what are you doing? Are you meeting with a forester? Are you driving the property? Are you walking the fire lines that you have out there? Are you meeting with someone from NRCS to talk about cost share programs? Are you coming to activities like this? What are you doing? What's the frequency of activity that you're doing things out there? The more you harvest, of course, that makes it easier to call business, right? But you can do it in other ways, and that's where we get into this kind of facts and circumstances. If you can keep a journal, show that you came to this, that you spent time today learning from each other, learning from us up here about what you're doing on your land. You're documenting expenses, but you're also documenting your learning process and everything you do. That sounds like a pain, but if you had a business, you keep track of everything, right? If I, as a forester, if I go to continuing education, I keep track of that, right? I have a little journal to show my boss what I did professional development, right? That's what you have to do. If you want this to be a business, prove it. Sit down and show that you acted just like it was in a business. You know what you're doing, and you want to know more. Because if you don't, you might find it in that other category, that hobby work. And hobby is just not the right place to be. Okay? The other piece of this is intent, right? Do you intend to make a profit? Gosh, I hope the answer is yes, right? At least break even, right? You have an intention. And that can be through an increase in value, just property appreciation, right? You have some expectation. That's a fairly easy sell on land, right? Land prices don't go down, they go up. So document, and then we can compare to other landowners. What is somebody else doing that we've decided is in the business? That does not mean compare yourself to Westervelt, Weyerhaeuser. That's not what we're talking about. Other private landowners, smaller landowners, what are they doing? They're not out there staring at the trees every day. All right, next tip. Properly classify your sale proceeds. This one is really kind of critical. And it starts with a few questions. How did you sell your timber? And I don't necessarily mean lump sum, pay as cut. That's all important, but that's more on the filing end of it. What I mean here is, did you sell it on the stump, right? Or did you sell the logs? And this is where it gets kind of weird, okay? And some of you may have heard of 631 days. Anybody heard of that? Okay, just a couple of people. All right, so what this gets into really is whether I have, I'm going to make it as easy as I can, if I have a procurement forester come in and he says, I'm going to pay you guys for the trees or per unit, and he's buying it on the stump, versus you cutting it yourself, or you hiring a logger, the logger cuts the trees, and then you sell the trees. You sell the logs. Those are two different types of transactions, and the federal income tax code looks at those very differently. So how did you sell your timber? That's going to be key number one. And then, of course, if you cut it yourself or sell it either as firewood or you sell the logs, that's a different category as well. So that's going to be a really important decision point for us. And then, did you meet the holding period? So in order to get the kind of treatment you would like to have for your timber sale, you need to hold it at least a year. And so that year comes down to when you got it, but also how you got it. So if I inherit it from my grandmother, I don't need to meet that. I automatically meet that holding period. So we assume I've already got a year. If I get it as a gift, it's how long did they hold it and how long did I hold it. And as long as that's over a year, then I can get premium treatment. And then if I buy it, I'm just looking for the year period. Okay? So why do I care? Because it's two types of income tax, right? We have a capital gains tax structure, and we have an ordinary income tax structure. Where you want to be is in the capital gains tax structure. Right? Why? Better tax rates. I shouldn't have to tell you any more than that, right? Lower tax rates, good, right? We all like to pay less? I'd like you to pay less. Right? So, in some cases, you're going to actually go through both tax structures. And that's not as scary as it sounds, but if you cut your own timber, you're going to have to make that transaction in a couple different pieces. And you'll actually pay part of it in the capital gains rates and part of it in ordinary income tax rates. That's one of those provisions that they could take away from us if we're not really careful. So there's different rates for those two types of taxes. And then, oh, by the way, if you put it in as ordinary income, you might pay self-employment taxes as well. So check that and start thinking about the percentage of taxes as that starts to add up. So here's a really scary fact for you. I used to teach a income tax course in South Carolina. Had about 600 tax preparers come in a year, and I would talk to them about timber. And first off, they thought everybody was doing this for fun, that it was a hobby. That's a problem. The second thing they thought was that it's all ordinary income. That's a problem. Okay. So even if you have a tax preparer doing it, check what they're doing. They sign it, but it's your money. Okay. All right, next piece. Know your basis. Okay. How many people in here know what basis is? Yay. How many people know their basis in the timber? Not that you can't tell them to today, but you could write it. Good. Okay, that's really great. All right. So basis is a really important number. Basically, I hate to use that way, but it's telling us the amount that we have invested in an asset. And I want to be clear that the investment piece doesn't necessarily mean that you actually paid money to get it, but that you had some opportunity cost maybe in it. If I inherited and I don't sell it, then that opportunity cost existed. I could have sold it to somebody, and then I would have had the cash. So think of that as my investment in it. So how you get the property is going to tell us what your basis is in that property. So if you haven't gone through this, my challenge to you is to go figure this out. Okay? So depending on how you get it, whether you purchase it, inherit it, plant it yourself, gift or exchange, each of those points is going to give us a different starting point for our dollar basis for the property. Okay? So clearly, if you purchase it, it's what is the whole acquisition cost. If I inherited, the fair market value data for the person that I inherited it from. If I planted, it's the cost of the establishment of the stand, not my labor. I hope everybody heard that. My own labor does not count. And then if you get it through a gift or exchange, there's a whole bunch of rules, and you really probably should go talk to an accountant. Okay? That gets really a little complicated. All right. So not only do you need to know that number, you then need to kind of break it out among everything that you got. So if I purchase a property, and let's say clearly I have land, maybe there's an outbuilding on it. I've got some pre-merchantable timber, some stuff I can't cut today, some young growth, and some merchantable timber. I want to take that purchase price and kind of split it among all the pieces. I'm working with a landowner through email right now who inherited property, and they never put any dollar value on the timber. And he said, well, it was only 1 or 2 years old when I got it. And my challenge is to him, are you telling me there was no value in those 1 or 2 year old trees? And some of you may say, no, there's not. I hope you realize there is, right? Because somebody put those trees in the ground and you didn't have to, right? So there's an inherent value. You did pay something for that or receive value for that. And so that's what you're trying to construct is how much of a purchase price should be allocated to the different types of timber on the property. And put those in kind of an accounting system and keep track of that. So we do want to establish that basis at the time you get the property. That's the easiest time to do it. It's not the only time, but if I ask you what your timber was worth 5 years ago, now we got to start backing up and figuring it out, right? If you come to me as a forester, if you don't know what it was worth 10 years ago, we're going to back up into it, and you're going to probably have to pay for that from your forester. Okay? It's not necessarily always an easy process, and if you thin timber in the meantime, you just made it more complicated. So the sooner you can do this, the better, because we have the information. But even if we do it retroactively, we're going to be operating on the what was it worth when I got it, not what is it worth today. That's one of the things in the tax code, and Scott can rail probably all day about this, is there's no markup for what is it worth today before you sell it. You don't get to increase the value along with timber prices or volume. That basis number is not static. It will change over time. If you have capital expenditures that you cannot deduct, then you're going to go ahead and add that to that basis account. So it'll increase, but it also decreases as you start using it to offset gains. So it's going to go up and down. So you have to keep track of this. You don't have to have an accountant to keep track of this. You can do this in a spreadsheet. It's just simple addition and subtraction. All right. So you had a sale, and we talked about how to classify it. We know that we got to deal with basis, but we also want to start working on chipping away at that the sale proceeds, so that we pay as little tax as we're required to, okay, legally. So we've got the sale proceeds, I've got some sale expenses, we're going to subtract that off of that. And then this magic number called depletion. Most of you are probably familiar with the word depreciation, right? What happens to your vehicle when you drive it off the lot, right? Or any other equipment that you have. Depletion is the way we look at that from a natural resources standpoint. Okay? What's left is going to be our taxable gain. So, depletion is really just the recovery of your basis in that timber. So what are you paying for it, right? If you have stock and you sell the stock, you take off what you paid for the stock and the difference is the gain. Same concept here, okay? Except we don't sell maybe all the timber at once, right? When you sell the stock, you sell the entire unit or partial unit, right? But when you sell the timber, you may thin it instead of taking all of it at once. And so what's going to happen is we're going to recover our basis in proportion to the amount of timber that's sold. Easy example. I have my timber out there, I do let's say a third row thinning or whatever, and I take 30% of the volume. If I take 30% of the volume that was out there, I'm going to use 30% of the dollars in my basis account. That's the easiest way to look at that. Okay? And then I'm just going to subtract that off of whatever I get paid for the timber. And then take my expenses and whatever's left and pay tax on. So we can calculate that for every timber account. Of course, the more accounts you have, the more you have to keep track of, right? But if I have a stand of merchantable timber out there, maybe it's a nice stand of longleaf, and then I have a stand of loblolly over here, I can keep those two separate, and I would have a depletion amount for each one of those, a basis account for each. All right. So you've harvested, you've taken care of the sale, and then optimally what you do is you reforest, like the land you talked about. So there's some reforestation expenditures. And there is a provision in the tax code that allows us to handle these reforestation expenditures. And so we can take up to $10,000 worth of these reforestation expenditures and deduct them in the year on that tax return for that year. And so that's a nice little deduction that we have. You can do that per qualified timber property. That's one of those terms that the IRS doesn't like to define for us. And you just kind of have to go with whatever you're comfortable with or your tax preparer is comfortable with. So I tend to think of it on how I manage the property. If I have different units set up, then I have that $10,000 per qualified property per unit. Okay? And I can do this every tax year as long as it stays in the tax code. Again, as long as they don't take it away from us, I can use this. And then whatever's left, if I spend more than $10,000 in that tax year, whatever's left, I'm gonna write it off over the next 7 tax years. Okay? And it's not super complicated to do, but there's a little bit of a process to doing that. What this means is at the end of this process, I have 0 basis dollars left to offset a future sale. Okay? Don't get real freaked out about that. Some people like, wait a minute, I want to be able to offset the gain in the future. As an economist, I want to think about dollars in my pocket today being better than dollars in my pocket 10, 15, 20 years in the future. Okay? So it's better to recover those dollars today. All right, so however, the other nasty word in the tax code, in my opinion, is this thing called recapture. If you plan or you wind up selling your timber or the property with the timber on it within the first 10 years after starting that process, they are going to reach back and get tax benefits back from you, potentially with some interest as well. So if you think you're going to sell the land or the timber before 10 years after reforestation, don't do this. If your plan is put trees back on the land and then sell it, do not take this incentive. Okay? It'll cost you some tax dollars. There is some strategy here to straddle tax years. This is for site prep planting type of expense. expenditures. And so I can go ahead and do my site prep in one tax year and then plant the trees in the next tax year, right? That's fairly normal operations for us. And that allows me to have $10,000 twice, up to $10,000 twice. If you don't use it all at one time, that's fine. And there's no carryover or whatever you don't use. Okay? So really great provision, kind of helps soften the blow of the expenditure of money for reforestation. It doesn't just have to be reforestation if you have a field that you've always been wanting to plant. That works over there as well. All right. You want to deduct your expenses if possible. That's not going to be possible for everybody, unfortunately, due to some changes in tax law. Businesses can deduct all ordinary and necessary expenses that you use in production or collection of income. That hasn't changed. What has changed is how investors are able to handle their expenses. So investors normally could also deduct all those expenses associated with production of income, but we were doing that through the miscellaneous itemized deductions. And the most recent tax changes, recent being like the end of 2017, suspended miscellaneous itemized deductions. Okay? And so what that means is if you're an investor, you cannot deduct those expenses right now. Okay? So we can deduct the property tax no matter what as long as you're itemizing. Okay? So that part doesn't change, it's just kind of where it goes now. Otherwise, you can capitalize what we call carrying charges, so that property taxes can go on your basis, and they'll be there for future use. If you said the word hobby, or if it really is a hobby for you, your expenses associated with ordinary management are not deductible. Okay, that was also something that happened in the last tax change. All right, casualty events. Stuff we don't like to talk about, stuff we have to talk about. This is really damage or destruction, loss of your timber, resulting from an identifiable event. Driving up yesterday, south of Montgomery, and I don't know where I was, probably 20 miles south. Very clearly looked like there was a tornado went through there very recently. We might have. Okay, thank you for confirming. That didn't feel good when I saw that. So you're looking for that identifiable event. By identifiable event, I mean I can go to the weather reports, I can go to the newspaper, and they can say, yep, this happened right there. Right? We can name where it was, and they can tell you when it happened. Okay, so it needs to be identifiable. It's sudden. Okay, and when I say sudden, the death of the tree was sudden. The tree didn't die of prolonged death because it didn't have water. So drought is not one of these conditions. Okay, it's the tree died. Think about the snap from the tornado, the snap from the hurricane winds. It needs to be unusual. And I know you're saying, wait a minute, we're in the South, hurricanes happen all the time, but it's still unusual for any particular location to be hit by that hurricane, right? It doesn't always go through the exact same space, so we still can call that unusual. And then, of course, it's unexpected that I cannot predict that this is going to happen. I cannot say that I have a drought condition every June or every July, right? So the deductions are going to be limited, and this is the rub, this is the really hard part to talk about. They're limited to the lesser of the decrease in fair market value in the timber, right? Or your adjusted basis, so that money that you had invested in your basis account, right? So let's think about this, and this is what I don't like to tell people. You use that reforestation incentive because it's a great idea, right? So your basis is 0. And then a hurricane comes through, or a tornado comes through, and it snaps your timber. The lesser number is going to be your basis, which is 0, which means you have no deduction. Okay? FLA has been working very, very hard for many, many years. Continue to support organizations that fight for a change in this. It's a really, really tough thing. I was in Oregon for 7 years. The fires were insane out there, and I had lots of people call. It was completely burned. There was nothing to salvage. And it had been so long ago that their basis was pennies on the dollar. And it's just adding insult to injury when you have to tell people that there's nothing they can deduct. Okay? So the one thing I want to tell you that is a rumor, misperception, whatever you want to call it, you don't have to be in a presidential declared disaster area in order to take casualty loss deduction. So if you are able to do the deduction, you don't need that declaration unless it is personal use property. Hearing accountants get that part wrong. Okay? And so I just want you to hear that. I am happy to provide proof that they're not right if you need me to. Okay, I've had to do that for a couple people already. It's wording that's just getting missed somehow. And then if you salvage, the gain may be taxable from that fund, right? You may not be able to take the casualty loss, the gain may be taxable. And you may also be able to defer the gain if you put it into replacement property. So if you will put more trees on it. All right, real quick, other income, cost share income may or may not be, you may be able to exclude it completely or partially. This is money from EQIP type of programs. If you get CRP payments, anybody get CRP money? CRP is kind of two pieces. Part is cost share, and part of it is kind of a rental payment, right? The rental payment part cannot be excluded. It's actually ordinary income, so kind of a little bit of a double thing there for you. Pine straw hunting lease, that's ordinary income. You can argue that all you want. It's ordinary income. Okay? Carbon. I know we have a carbon presenter right behind me. And so we're still trying to figure carbon out. There's nothing from the IRS that tells us how we're going to treat carbon. We suspect right now it's going to be ordinary income because it's not the capital asset itself. And certainly if you look at some of the shorter programs, NCX being one of them right now, the 1 year, that's going to be ordinary income to the best of our read. And we have a couple of accounting firms that are kind of good like on that need. Keep good records. Okay? Journals, ledgers, I don't care whether it's paper and pencil, whether it's in a computer program, but keep the records. Keep all your receipts, invoices, sale documents. The more you have, the better. And scan those things in if they're on that thermal paper, because the thermal paper, everything will disappear off of it. Keep it at least 3 years because you can amend your return and you're subject, you can be audited within that 3-year period. Just real quick as I end here, some resources available for you. You got the tax tips in your hand. Hopefully we'll be doing that every year. The Hardwood Timber Industry Audit Technique Guide. I looked at that thing, I think it's dated from like 15 or something like that. And don't let the word hardwood get in your head. It really is a guide for an auditor. So if they come out to your property, it's kind of telling them about your industry and gives them some things to look at. So if I was going to go through an audit, I want to know what they're going to look at, right? So this is your education of what they're going to do when they come to your property. And then the Forest Landowners Guide to the Federal Income Tax, that is being revised right now. I'm working on that with a couple of peers. We are probably a year out from that being published. It's a lot of work. We had a Woodland Stewards Tax webinar series that you can find online. Everything was recorded. It was 5 weeks. And they recorded it, and there's some Q&A in there, some good questions that were answered live that you can listen to. And then a few years ago, I did some videos for Forest Landowners Tax Council, which is part of FLA. Those still live out there, and they're just basic information. That was it. I did it. Real close. So thank you so much for your time, and